Whether you're a small or a large business owner, we all experience cash flow problems at some point. And when that happens, you start thinking about what do I have to pay right now and what can wait till later. So you look at the list of your vendors and you pay them because without them you don't have a business. You also pay your employees because they're an essential part of keeping the business afloat. So where do you cut corners? Payroll taxes. When the bills start to pile up, payroll taxes often end up in pay later category. It is really easy to make a habit out of it, and next thing you know, several quarters or even years go unpaid. After all, the IRS is really slow in sending you the bill. So you carry on with your business and not really worry about it until one day when a federal revenue officer shows up at your doorstep. And next thing you know, you're in a total panic mode. You promise them the stars and the moon just to make them go away. Or even worse, they show up when you're not at your place of business and they bring their business card that they hand over to one of your employees. And you're dreading to make that phone call because you know that that conversation is not going to go well. So you owe thousands of dollars in payroll taxes. What are you gonna do? I've seen many business owners make the same mistake. They take their old IRS bill, they write a check to the revenue officer, and they hope that if they throw a little bit of money at the IRS and show a little effort, the IRS will magically leave them alone. But that's not what happens. Here's your number one rule. You need to get current with the current quarter. You need to start making your federal tax deposits, and moving forward, you don't fall behind. Think about it. If you pay your back taxes, but you don't pay your current taxes, then you're in a vicious cycle and it never ends. What's the point of that? Also, if you're not current with your federal tax deposits, you're not eligible for an installment agreement, offering compromise, or any other resolution available out there. Also, the revenue officer can enforce collection action against you and levy your bank account, seize your property, or even shut your business down if they don't think it's viable. So you get current for the current quarter payroll tax, you start making federal tax deposits in a timely manner moving forward, and then you go and look back at how much you actually owe for all of the years combined. Now, if that amount is under $25,000, and I mean tax, assessed penalty, and interest, all that is under $25,000, you qualify for in-business trust fund installment agreement. That lasts for up to 24 months. Now, if you owe more than $25,000, but you can make a lump sum payment to get the balance under $25,000, you can do that as well. So the IRS will allow you to pay it down under $25,000, and then you don't have to provide any financial statement and just ask to be set up on an installment agreement that will last 24 months. Let's be realistic. Most business owners owe way more than $25,000 to the IRS. They also need more than 24 months to pay it all back. The revenue officer usually sends you letter 9297, the summary of taxpayer contact. This letter has a list of items the revenue officer is looking to get from you in order to determine your ability to pay. One of the items is Form 433B, Collection Information Statement for Businesses. You can find this form on my website at harpertaxsolutions.com under Useful Info. Now be very careful with this form. You are providing the information about your business. You're going to list your bank accounts, your business assets, your accounts receivable, and most importantly, page 6 will ask you to submit monthly income and monthly expenses for your business. Whatever is left over is the monthly payment the IRS is going to look for an installment agreement. So you need to make sure that this is completed properly. Now, a lot of people hire tax professionals to help them with the form. And again, you have to be very careful. A lot of tax professionals just retype the form and send it with supporting documents to the IRS. The next thing you know, the revenue officer is calling your representative to tell him or her that you have the ability to pay $3,000 per month when you know that you can only afford $500. How can that happen? Of course, no attorney will sweet talk their way out of it. This is a numbers game. So what your tax representative needs to do is take the form and the supporting documents, meaning bank statements, profit and loss, and most recent income tax return filed for your business, where that would be 1120, 1065, Schedule C, whatever the case is. They need to look at it, analyze it, and get back to you to let you know what the documents are showing in terms of ability to pay. You need to do that before it is sent to the IRS, so there is no surprise. Now, if there is a discrepancy, it needs to be addressed. I can tell you from my experience that 90% of my clients send me Form 433B completed incorrectly. So you want to make sure that you talk to your rep and analyze everything before it is sent to the IRS, because once the IRS has it, it becomes a permanent record and there's not much you can do about it at that point. Form 433B will determine your ability to pay or your inability to pay, and then you can decide if you want to resolve your tax liability via installment agreement, submit an offer in compromise, or you qualify for currently non-collectible status. Now there's one more component to all this that I want you to think about. When you own a corporation or an LLC, you have that level of protection where business liability belongs to business and it doesn't affect you personally. Well, it is not like that with payroll taxes. They do affect you personally. Anybody who is responsible for collecting and payment of employment taxes and willfully fails to do so will be assessed what's called trust fund recovery penalty. Now, this is also known as civil penalty, and it is the employee withholding of income tax and an employee portion of Social Security and employee portion of Medicare. So about 2/3 of your payroll liability will be assessed against you personally. It is filed against your Social Security number, so it actually affects you and your ability to borrow because the credit bureaus know about it. Now, I don't want to get into details. There will be a separate video about this, but for now you can find more information under harpertaxsolutions.com under services. If you have further questions, feel free to email me at info@harpertaxsolutions.com, or you can always call me for free consultation.